So contribution revenue. Okay, well, these are unconditional transfers of cash or assets to a new owner, so the title passes in a voluntary manner, so no one's holding the gun to your head, and it's non-reciprocal. So this is, okay, you give money to your school, or you give money to your church or your religious organization. This may include cash, services, assets, anything, right? You could give stock to your church. Like there'll be questions about, okay, we give stock to a museum, right? Different examples that you'll see here. Contributions, when do we recognize these, and any possible treatments involved with those. Recognition of these. Contributions recognized as revenues or gains and reported as increases to net assets without donor restrictions or donor restricted support, so depending on the situation, right, as we've seen, and as assets or decreases of liabilities, depending on the benefits. Maybe you are given a contribution that reduces your bills each year, right? Maybe you are given, credit toward a utility plant. Like there's just so many different contributions you can give to a not-for-profit. And contribution is revenue if it's part of the ongoing central activity of the organization. That would be, again, with the hospital or the museum, those are going to be fees charging people for the services. Contribution is a gain if it's incidental to the purpose. If I give a bunch of stock to a museum, that's going to be a gain. If I give just if I buy a bunch of tickets to the museum, that's revenue. Cash contributions, these are recognized as revenue gains and reported as contributions that increase net assets without donor restrictions or donor restricted support in the period which they are received. These should be measured at fair value at the date of the gift. Nothing too crazy here, just all these different treatments for how you're going to report and account for everything that these non-for-profit entities receive.